Welcome to section 2. This section is about cash and accrual accounting methods. More specifically, this section focuses on what is cash and accrual accounting, what is their main difference. We're going to see also examples of cash and accrual accounting methods on how sales revenue and expenses are recorded. And also we're going to see advantages and disadvantages of cash and accrual accounting. Also at the end of this section, you're going to have the opportunity to practice on the two accounting methods. Let's see the two accounting methods that businesses are using in order to record their sales, revenue, and expenses. Now, around the world, a business during a specific fiscal or calendar year, they have to choose which method they're going to be using for recording their revenue and expenses. There are two ways to do that. There is the cash accounting method for recording sales, revenue, and expenses, and there is the accrual accounting method for recording exactly the same financial elements. The difference between the two methods lies at the time revenue and expenses are recorded for a business. In other words, the difference between the two methods is in when sales, revenue, and expenses are recorded for a specific type of business organization. Looking at the cash accounting first, this method of accounting recognizes revenue at the time payment has been received from a customer. Now, this method doesn't care whether the sale was made before the payment or after the payment. Okay, and also regarding the recognition of expenses, this method also, in exactly the same way, recognizes expenses at the time payment for goods and services has been made by the business. Again, in this case of an expense, the business is not concerned whether services, let's say of employees, has been received before or after the payment. So let's see now in practice how a cash accounting records revenue with specific examples. So here I have an example of revenue recognition. Okay, and I have here a diagram to understand clearly how cash accounting recognizes sales revenue. Let's see first hear the scenario. So let's say we have a business that delivers goods to a customer in January. Okay, so we have provision of service in January. However, okay, so here is the provision of services, okay, along with the delivery of goods. The payment for these goods is made by the business in February. So according to the cash accounting method, for this transaction of delivery of goods, this type of business, since it uses the cash accounting method, it will record its sales revenue at the time that payment has been received by the customer. That means that payment received is in February. Therefore, as you can see here, we're going to record sale in February. Okay, so this is an example, one example to see how a revenue is recognized by using the cash accounting method. Let's see another example. We have another revenue recognition example. I have a different case. Now remember always the basis, the time of the payment. So we have here a case when a business delivers goods to a customer in February. However, for some reason, payment has been received a month earlier by the customer in January. So here we have a so-called prepayment. Now, since the cash accounting method records revenue at the time payment has been received, then, as you can see here, February is the delivery of goods to the customer. However, in January, since payment was received, I will record my sales revenue for this transaction. Again, here we see the time of the payment, and this is the month in which we're going to record our sales revenue for this transaction. The transaction, remember, is the delivery of goods to a customer, which came about in February. We continue with the cash accounting method, and now we're going to see how this method recognizes expenses. Okay, I have again a diagram here so you can more easily understand the process. Here is a scenario. So let's say we have an employee who worked for a business during March. Let's say provided his or her services in March. However, the business paid the employee for these services in the following month in April. Okay, so this is an example of a salary expense. Since the cash accounting recognizes expenses at the time of the payment, okay, so we have here March is when services provided by the employees, which means that the business received services from its employee. Okay, and here April is the month of the payment. So according to this method, the salary expense will be recorded at the month that payment was made to the employee. Okay, so this is an example to understand expense recognition for the cash accounting method. Let's say another example. So I have another scenario. Let's say we have an employee who worked for a business during the month of March. However, the employee received payment for these services a month earlier, in February. So, in other words, the employee received the prepayment from the business. So, we have here the month of March, which is services provided from the employee. And here we have the month of February, during which the employee was paid. So actually we have the payment that took place. So according to the cash accounting method, the salary expense for this type of services provided to the business will be recorded at the time that payment was made, which means in February. So the salary expense will be recorded during this month.